Hello. So, how is everyone doing? Today I want to talk about basically about how you can be trading price when when price is at its all-time high. So, when we talk about all-time high, we mean that price is first time reaching that point or that value. Because, for instance, this is not all-time high. We can go from monthly time frame. This is GBP JPY. In most cases, people can think this is all-time high of GBP JPY, but the all-time high of GBP JPY is at this area. This is the all-time high. Of course, uh, price GBP JPY had some factors that guided it to be trading lower. First was this area of liquidity. Second was some fundamentals. So as I said earlier, that always um, prices will follow what we call the fundamentals. I mean, the fundamentals will follow what technical uh, has already published. So as price entered this area of liquidity, it eventually dropped down because you saw the whole 2 months is that price has been dropping without stopping. So we are going to see on how we can be trading what we call the all-time high. So as I'm talking about the all-time high, let us check some examples. We see US 30. It was priced that was at all-time high. So this was all-time high of US 30. Price has never reached this point. So this was all-time high. Before this one, we had this one. I guess also NAS 100 price was at the all-time high. This is all-time high of NAS. Price has never been at this point. When we say again, I think it's BTC. Same price has never been at this point. It's first time price to be at this point. I think also we have gold. I can say gold. Let's check on gold. Sorry. So price has never been at this high. Of course, I took the trade today. So price has never been at this point. It's first time to be at this point. So how do we grab the opportunities based on the structures that are formed at these highs? In most cases, whenever we trade, we normally look at the left-hand side of the price, like is price encountering any kind of area of liquidity, or is price doing some sort of things that are okay. We do also have USD JPY. As you can see, this is I think this is all-time high for USD JPY. No, it's not all-time high, sorry. But yeah, I think it's nearly encountered this area of liquidity that was here. So this is not all-time high, but it's the area of liquidity that was encountered by the price. I thought it was all-time high because these JPYs they have been dropping rapidly. So let us check starting with USD, I mean US 30. So without wasting time, think how do things be tradable? I mean, how are things tradable when at the all-time high or maybe all-time low? So they're gonna be tradable. This strategy works on all-time high and all-time low. And all the basics lies from the uh, everything that I talked about, the areas of liquidity, engineer liquidity, the shift, the inside formations and the outside formations, and so on and so forth, the support and resistance flip, everything. So you can trade outside the knowledge that I provide. That's it. So when I say about the all-time high, we mean that we'll wait, we'll see, or we'll be observing as price pushes more higher. We'll be observing for the price to offer us a shift and formation. Shift and formation. So it's either inside formation or outside formation that hasn't been grabbed by the price. That's what we will be considering. So if price has offered us maybe the outside formation, it's the one that we'll be taking and we sell. If price has offered us the outside formation, then we'll be taking it and sell. because that's what we call the areas of liquidity. So for instance, we have found now price has offered us the shift in maybe 4 hour. We'll go into 30 minutes. We'll look for the engineer liquidity here in 30 minutes of structure. Then we can refine more as price offers us some more room for us to take the trade. So this is how you can be taking this such kind of trades when they are the price is at all-time high, as I said earlier. So this is US 30. We'll be observing because the smaller structures are made area rather than big structures. So the shift that will be made from 4 hour is totally different from the shift that will be made from maybe 1 hour. But sometimes these kind of things they work the same. So there's no offense that for instance, this is our shift. This was 4 hour shift, but as we talk about 1 hour, maybe we can see the 1 hour shift was at this point, you see. So this one was made area compared to the other one. So as price before making a shift, these all were inside formation, and eventually price liquidated all the rest of the formation, and we were only left with this. Remember, this is US 30, and for US 30 you need at least to be careful and minimize risks as soon as possible. So we can go from 1 hour, we can go 15 minutes. We look at the structure, we see that we have our failed engineer liquidity. So if this failed, of which now our stop loss will be at this point, you can see this will be our stop loss. Let me put this magnet tool. Oops, sorry. This will be our stop loss. So if we measure, we see the risk is too high. There's no need for us to get into the trade. Yeah, this is almost 1,000 pips. So we can go to 5 minutes to look for more where we can minimize the risk. We see it's the same structure that we market failed engineer liquidity. But whenever we go to 3 minutes, I think everyone can see we do have this is our current structure or the nearest structure to the price. So this is what will be our point where we take our trade. So this is our entry point, while this one top or this one will be our stop loss. And let us measure because it's 30. At least I can say they look like, I don't know if it's 200. I don't know if it's 265 pips. Maybe let us mark them as 265 pips. But in most cases for US 30, this is failed engineer liquidity. In most cases US 30, you will find they differ. They are what we call they differ. They sorry, volatility due to the contract size. So this is where we put our stop loss, and this is our entry point because it's our overthrow and price successfully broken to the bottom. So this will be our entry point. And we go back to 1 hour, maybe. Yeah, 1 hour. And sometimes you'll be wondering why price just changes the direction from a certain point. So because we know it's all-time high, price will eventually be proceeding to the upside direction. You should not be holding your trade too much longer, unless otherwise maybe you have the reason to hold your trade much longer. If you just be taking your intradays or swing for some few days or few hours, it's okay. You should just take your trades and move on to the next phase. There's no need for you to hold a lot of time these trades because it's just changing the direction and eventually, so price eventually came to tap our entry point. Then so this was our entry point. Sorry. So for my case, I should be taking the trades, I mean the profits at around this point maybe. But as I said earlier, the points where we'll be taking our profits are these the turning points. So if you should be taking your profits around those points, it's okay. So as you can see, but if price closes below here, as you can see, it's closed, you can still be holding the price until maybe these next levels that price has been publishing. So if price closes again here below, then you should be taking your trades. You should be holding again. So price eventually closed below. So it's okay for you to keep holding as long as price closes, but sometimes there's no need for you to be holding much longer because price have taken its liquidity. It will eventually go to the direction that it's supposed to go, which is uptrend direction. So yeah, that's it. And here also we do have BTC. We all understand that this was all-time high of BTC. This was all-time high. But as I said, price always gives you some movement or some the signs before changing the direction. As you can see from other structures here, we didn't have any kind of shift. We didn't it didn't have any kind of shift other than this one. Of course, price came here to liquidate the structure. It was all-time high as well. This one was all-time high. We also had another shift here, which is this one. It's all-time high as well. So this one didn't hold much longer for the price. It went to the bottom, then again went to the top side. So of which now it wasn't good for the price. But this one, this is 4-hour shift. You can find shifts from any kind of time frame. The more you go to smaller time frames, the more you'll be able to spot them in an easy way. So this is our all-time high. This is the formation, but this one is our shift that was made by the price. So price made the shift and it gave us two formation. We had this formation. This is our inside formation. Also, this is our inside formation. This point, this one. So eventually price will not deal with this one. It will eventually deal with this one. So this for the support and resistance flip. Support and resistance flip, it will become your entry point for those who understand about the support and resistance flip. But if you don't, then when you go to smaller time frames here, you will find the failed engineer liquidity around this area of liquidity that I've marked here. You will always find the failed engineer liquidity. To every support and resistance flip, there is an engineer liquidity. I think most of people don't understand that. There's the failed engineer liquidity. There's an engineer liquidity that failed. So if you switch more to maybe to 3 minutes and 1 minute time frame, it will be easy for you to consider that level. So as we go, it was 4-hour because we have marked. Sorry, where was that? This area was the support and resistance flip. So we just put our entry point at this point. This becomes our entry point. Or if you minimize much to go, you minimize your risks, you can still put the entry somewhere top, or you can find the other areas that are also the failed engineer liquidity. They can be your entry points. But based on this structure here, the entry was just here. We didn't have much time to, we didn't have much things to talk about because this was the good structure for you to take the trade. So where do we put our stop losses? The same time frame of 30 minutes, sorry. We can put here, here, or here to these highs for the support and resistance. So these highs can be used to put our stop losses. I don't know much about BTC, but I think you need to minimize some risks because once you take them in an opposite, let me check. Is this not the failed? Oh, this one is the failed. Sorry, this one here. Okay, this is the failed engineer liquidity. Yeah, so this becomes your failed, and your stop loss can be put here. We go back to 4-hour. Yeah, but this stop loss looks very small. On my side, I won't be using this kind of stop loss. Yeah, it's okay. Let us pray out and see how price reacted on this point. Is how things are things are very easy. You just have to know how you can be praying with charts. So as you can see, this is what happened. As I said, yeah, the stop loss was missed by a few pips. So this was the entry point that someone could have taken based on this kind of structure. Let us see another example. Let us see, yeah, gold. So up to date, sorry, BTC USD, and up to date, you can see price kept going down and down, and that's it for BTC USD. But the last point that maybe you should have been taking your profit is this one. If price closes, it doesn't close below, then there's no need for you to keep holding the trade. So that's it. And we have NAS already. NAS, is it NAS already? Let me check on NAS if price had offered us any kind of structures. I think there's no here for NAS. But we have gold. You know, I traded gold, and I'll be showing you some things that I took from gold. First of all, I took the trade of gold from this structure. For those who are my students, they understand. I've been sharing to them. So I took the trade from this structure, and today I managed to take the trade from this structure because I showed you. Let me show you something here. Let me show you one thing again. Sorry. This is our area of liquidity. I showed you here on YouTube, but most of you, of course, you know, you get things for free and you don't take consideration. So this was the area of liquidity, which we do expect price maybe to come. Of course, at any point, it doesn't, it's not a must thing that the price must come here and shift and give you the formation. But if price does so, then you should be taking advantage of it. So eventually price entered the area, as you can see, entered the area here, and it shifted, provided us the shift and the formation. This is our formation. This is our inside formation at this point. We can mark here. It's okay. This is our inside formation. 1 hour, 15 minutes, we go and look for the things that will guide us. So we see we have engineer liquidity at bottom, 5 minutes, because as I said, to any rejections, for instance, here we had a lot of rejection, there must be the failed engineer liquidity, which is also the support and resistance flip. You understand about the support and resistance flip. I think if I didn't upload the video here, I'll be posting it shortly. So this is what happened, and most of you didn't take notes of what I taught you earlier, and that's it. Of course, we do get some setups, and if you don't take considerations of the prices, then you will end up you'll be end up in the wrong direction. Of course, we had the trade that we took around this point, and we had the second one that I did take the trade today, and eventually it ended up, it's almost now, I think if not 500 pips, it must be some things like 400 and yeah, 407 and 70, sorry, 470 pips. But before price coming to this point, we had this all-time high that was given to us by the price. So this was all-time high. Then we had our shift. We can see it clearly in 4 hour, and we have our formation. So let me do this shift formation. 30 minutes, we look for the engineer liquidity or failed engineer liquidity. We see this is our failed engineer liquidity. This is our failed that was given us to us by the price, our failed engineer liquidity. So if you can put your stop loss somewhere here, and eventually you will see what happened here by the price. You will see what happened here by the price. Let me show you. We go back to 4 hours. I pray up the price. Let me show you what happened by the price. You see, most of the traders were taken out at this point because we had news on Friday. Was it Friday? Yeah, we had the NFP here. But whenever you go to your 30 minutes, maybe to look for the, you see this was our entry point that was triggered few hours before the news went up and went down. So for those who took the trade from this point were correct, but if they kept holding, the price went up for some pips, then went down, but they were still correct in the terms of the direction because price didn't close above this structure. So we had no any we had no any chances to say that this wasn't correct structure for us to be taking the trade. It was correct structure, and for that case, people ended up not securing the bag. They took the stop losses, but for the first, I think if it's I think 3 hours, if not, it's 3 hours, sorry. Let me count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay, 14, 7 hours, I can say. Is it? Is it 7 hours? I think 7 hours. So they took the trade from this. That was our failed engine liquidity. Price came to tap the failed. As you can see, it tapped the failed, went to the bottom side, and the stop loss was the same. Then eventually, when the news came up, we bought, then sold. I bought, of course, the news because, you know, I was on buying trades and price eventually broke this high. So yeah, based on my criteria, I bought and I took the trades. I took my profits. Then the next time price dropped to the downside. So for those who were wondering how we managed to take the trades, based on the bottom side here, this one is based on the structure. Based on the video I showed you earlier from from my YouTube. So maybe you should take consideration of these kind of things. They will help you in the future. And I don't know, because yeah, maybe you are not serious about what I'm posting here. And of course, I won't stop posting because some people, they found my videos useful. But as I was talking about, this was how we should be securing the bags when price reaches the all-time high. And for instance, for those who took the trade from the top here, they will be now securing the trades at around around 8,000 pips. Is just the movement that began from this point here to going up. So that's it for today. Thank you very much. And I think this video will be helpful on your side and to everyone. Thank you and enjoy your day.